Yeah, this is Avi Harkishin. I actually did an entire 9-minute video recording on my computer regarding Intel analysis, but at the end at the video of the video, I realized that my microphone was mute. So I'm just gonna try to do this fast on my phone. Sorry, I'm like speaking really fast right now because I got like a lot of stuff to go do, and it's 1:09 a.m. here in New York. So let's look at this. This is a monthly chart. The first thing I'll notice, I have it in log scale. So that's the distribution pattern right there. So it seems like this stock either want to be distributed lower. I don't know what institution will do. Obviously, they're in charge of what they want to do with this stock, but this is stock is a high risk stock at the moment. Now there's a demand zone clearly here. It's a double top in a way. You have a lower top over here. Now, if I'm to zoom in a little bit, if I'm to trade this, now the one thing I notice is this is an ABC pattern. It's a ABC correction pattern right here. Now, 1852. That if I'm entering long, 1852 would be where I get out of this trade. Get out, manage your risk. Don't try to be a hero. Just get out, because this could drop further. This could come down all the way to the demand zone here, somewhere in 15, 16 to 12, or even 980 something. Just get out. You could always re-enter the trade if you need to. Let's go to the weekly and let's see what's going on here. All right, so if you're looking at the weekly, it's clearly in a range right here, as you can see. Let me try to do this. Okay, it's in a range. So this is called a base. So technically what happens when a stock is dropping or it's moving up, if it wants to accumulate or it wants to go higher again, so a base will be formed and the stock either break out of the base or the range and it moves up, or it breaks below the range or the base and it moves down, then forms another base. So you have the weekly. Now if you look at this right here, still a lot of selling volume, but it's more of a hammer in a way. Then you have some selling volume here. Then you have this here, this candle. There's a lot of volume coming in, telling me they might want to push this down a little bit more. But let's just say if I'm accumulating shares in this company, now if you're managing your risk, this is what you need to do. Let's stay here in Intel. Let's just go daily. All right. I'm gonna do this on my phone really fast. Okay, here's the daily. So if you're looking at this candle, it looks like it wants to come down a little bit more because it's trading in this range or this base. So if I'm accumulating, I want to accumulate more towards the bottom where the base is. So let's just see. So the price target would be, if you want to accumulate, you probably buy right here at maybe 19, anywhere between 2007 to 1852. That's your accumulation range. All right, let me see. That's a drop of about, it's about a 7%, 8% drop. That's your risk right there. You get out. If it drops below that, if it breaks this fib right here, 1852, get out of the trade. But this is where you're accumulating. So your accumulation range, or your number that you're accumulating at, your price would be between fib 618, which is 2007, to this area. 1939 would probably be best. That's where institution tends to accumulate from discount ranges, but it seems like it wants to come back a little bit more. So if you want to be a bit more patient, if you're accumulating shares or you're buying calls, whatever the case is, it's going to be around this area, and hopefully it goes back up again right here and continue to trade within the range. Now, once it breaks here, you get out. Okay, but if you're accumulating and you're hoping it goes up more, if it breaks above this, it's most likely going to close the gap at 28.89, and once it does, you take your profit and you leave and see what happens. So if, let's just say if this is an accumulation, just say it's most likely going to have several wave. So you might have something like a wave 1 from here to here, then wave 2 come back down, test this range right here as a wave 2, and then move over to wave 3. So those are things that you look at. That's my analysis right now as a stock I may be looking to trade shortly, but I want to see probably a bit more downside based on this. If I'm to go to, let's see the 4 hours, what it says. Yeah, so I think there might be a bit more downside, so you probably want to wait a little bit before you accumulate if you're going to jump in long. So wait for it to come back down a little bit more between the 618 fib to the one at the demand zone. Okay, 2007 to 18 something. So that's your accumulation range. All right, hopefully that was helpful. All right, later, bye.